It's showtime. Let's get this ready and rocking and rolling. If you guys don't know already, we're going to be talking about Freddie and Fannie. And I'm not talking about two people. I'm actually talking about two mortgages that really backs the entire United States, honestly. If you don't know about it, if you don't know about it and you have a conventional loan, chances are that they literally helped you get this loan. But if you don't know what we're about to do here today, not only talk about that, this is where we talk about real estate market updates. We're gonna even later in the stream in itself, we're gonna give you a little bit Q&A session. So if you have any questions, feel free to go ahead and drop those in there when we get to that point, or even throughout the entire stream in itself. This is where we are every Wednesday, 7 p.m. right on the dot. You see, we waste no time, and we're gonna get right into the content in itself because I think we're gonna have a lot to cover. In fact, this one article here, we're gonna really take a little deeper dive into it in itself so that you all can understand entirely what it is when I'm talking about Freddie Mae and Freddie Mac. So let me go ahead and share my screen here so you guys can see it. Mm, There we go. All right. My screen good? Cool. So if you don't know what Freddie Mae and Freddie Mac is, they are like I said, they essentially just back the entire mortgage industry, allowing, how can I put this in words that would make sense, sorry, for everyone else? They allow for mortgages to really take part and allow for the average person to be able to purchase a home. Let's just put it like that. Back in 2008, what occurred, as you guys all know, they obviously had big issues and they had to get bailed out. So they ended up in conservatorship. Reason why I'm bringing this to everyone's attention is because conservatorship is when the government essentially is like, hey, y'all don't know what y'all doing. I'm taking over. And that's been there since 2008 after being bailed out. And now there's a lot of conversation about them getting out of there and actually going into what they're calling it going private, which then could also probably be meaning, right? They're going to go public and go right back onto the market, kind of what they were prior to 2008. But I kind of just read this all to you without actually discussing it. So we're not going to really dive deep into this. This is actually, and I see it here as I'm looking through it. This is actually something that President Trump was going to. He tried to do it during his first term, but I guess he ran out of time. I probably thought about it too late in his term and never had that chance. So now he has a chance now. And on top of that, we're talking about Elon Musk being there with the whole Doge campaign. Now they're really trying to cut costs. So this is, I think, high up, a very high priority on their list. In fact, to get this done, given that they didn't have the chance and now they have another chance to do it, could actually kick things off. But personally, I'm bringing this up to you all because this statement right here, and we'll really go into a little bit deeper into it, but it could lead to higher mortgage rates and risk for investors. Now you're probably wondering, well, how is that even the case? Right? For the past couple of years, it was all good just a week ago, but when we talk literally removing the government, the ability of the government to kind of back a loan, that does bring up some risk for typical investors. Because if you didn't know, I'll break this down even further for you guys. If you didn't know, when you purchase a home, there's a reason why you probably get letters from new mortgage companies all the time, because it's constantly getting sold off to another person, if of course that person, that bank, that lender doesn't want to hold it anymore. So that is essentially what the government is enabling, is right, giving a little bit of protection. If you were to default on that loan, you have that protection. And this is primarily going to be in retrospect to talking about conventional loans. So if you're FHA or even a VA, USDA, you're kind of, this is not going to really impact you as much. Honestly, those three products in itself can really get a little bit more love in the near future, if in fact this is actually the case. And of course, rates do go up. But let's go ahead and talk about what problem are they trying to fix? I mean, I already kind of talked about that. They're all trying to cut costs for whatever plan or reasons that they have. But let's go ahead and see what could this release mean to the home buyers and investors. As you guys all know, it could increase mortgage rates, which, man, if that increases mortgage rates, is just going to make affordability a lot worse. And I mean, that's just a battle that we're constantly going to be battling no matter what, until this issue entirely gets fixed, which I mean, it starts with the ground, right? You got to really get to that affordability aspect and really get prices to a sustainable level and incomes, honestly. Um, but there, here is talking about really if you invest in mortgage-backed securities, how is it that it's going to bring on more risk? So let's go ahead and tap into this a little bit more, right? If you have, therefore, you will demand a higher risk rate, a higher interest rate to compensate for that risk. As I mentioned, right? You're taking the government out the picture, more risk for everybody involved. Who knows if people are even going to want to necessarily, I would say, buy mortgage loans the more. And they call it mortgage-backed securities if you really want to be interested and take a look at it. But of course, higher rates means higher borrowing costs, as I've mentioned. And this is a good one. So now you're probably thinking, well, what if somebody decides to say, I don't need a loan. I'm actually I don't need a loan. Maybe I should have zoomed in. My bad, y'all. Maybe the person saying, I don't need a loan. I'm actually going to go ahead and purchase cash. And obviously this doesn't concern you. But I mean, how many people are actually buying cash? So according to a report by the NAR, about 26% of home buyers in the United States paid all cash in 2024. So not that many people are going to go ahead and be able to utilize this. In fact, I have a pretty picture that I can show you. I just have to locate it first, and then I can show you how important it is to have a 30-year mortgage. That's if it decides to show up. Let me see if I can get it for you real quick. Mm, no, we'll save this one. We'll save this one. Actually just because I teased you. I got you. Just because I teased you. So here is kind of how important the 30-year fix is to everyone, right? And you guys can see, right, how many people are actually getting long-term fixes in comparison to, a variable rate and whatnot. And we'll come back to this just because I think it is important to discuss and how the United States is in comparison to other countries. We are blessed to have what we have when we have a 30-year mortgage that literally does not change, because I know even in Canada is one of those countries that they have it where it's constantly changing and makes it tough. But however, like I said here, however, roughly 74% of buyers finance their home purchase. That's just last year, and that's of course down from 80% from the year prior. But I mean, how many people actually bought a home last year is the question, right? Because those numbers were down in itself. So that's not much that we can go ahead and control. But this is essentially why the Fannie and Freddie Mac are, I should say Fannie Mae and Freddie Mac are essential. Is because they're going to give you that ability to be able to purchase a home with the 30-year fixed mortgage and so on and so forth. If you don't know what a 30-year fixed mortgage, just know you're having this. I shouldn't say the same because you guys are all going to kill me later if I say it's always going to stay the same, because your mortgage does change, especially if property insurances and I would say taxes, if they do rise, then yes, your mortgage is going to change. But let's just say the loan amount that outside of insurances and even property taxes, outside of that, your mortgage is 9 times out of 10 going to stay the same as long as you don't refinance, right? So if we don't do anything there, then you should be a-okay. And so, as I mentioned, right, since 2008, they kind of came out of conservatorship. Well, they went into conservatorship, sorry. Now they're talking about coming out of it. So we shall see where that goes. And I mean, honestly, in my opinion, this is a play for a lot of people to, not a lot of people, at least those that are invested, right? And when I say invested, I'm talking about, like, let's say the Department of Treasury has financially supported the two companies through senior preferred stock purchases agreement, SPAs, which I honestly don't know what that is. I'm assuming it's like some sort of, I'm not gonna even say SPACs because I don't think that's what it is. But this helping them essentially stay afloat. But it's not only going to help the people with preferred stocks, it's also going to be helping the people who have private shares, right? The markets that most people can't touch in, which is so shocking, right? How that all works out for the average person. But I'm not going to go ahead and, if you really want to read this, you could definitely find this on CNBC. I definitely think it's something that everyone that is, I would say, even what a year or two out, I would say, it's very important to really understand and lay out, because this is one of those things where it's not going to happen. I personally don't see it happening next in 12 months, right? I see it more happening 18 plus months from now, which again, if you're in that market of trying to purchase a home, this could be something that is pivotal to you and it may make changes. It may actually hurt the market in the run in a way where prices do come down, right? Prices come down and it just won't look good for the average individual. Uh, but coming back to this, because I just mentioned what are the odds of it taking place, again, it's one of those tough things to time anything. And I mentioned to you all, right? So there is an individual here that is, I think personally, and you'll see it, Bill Ackman, he's bringing it up to the foresight. And I mean, you guys can take a guess as far as why he is bringing it to the foresight. My guess, not my guess, but something that I know, he does have shares. In fact, I think it's like 10% that I saw that he has. He has a good amount, and of course, he will make a good chunk of money if this thing goes private. And I mean, not private. Well, yeah, if it goes private, then of course he'll make even more if it goes public to the general public. So he, I think personally, really wants this to blow up for the simple fact that, hey, he could profit off of it. And I think, if I'm not mistaken, he's been holding those shares for a very, very long time. So that's not good for him and his hedge fund that he has. But I want to show you this statement here, just to kind of give you some clarity, because I know I mentioned it was in conservatorship. It was private, then it went to conservatorship because of 2008. But as you can read here, by the end of 2011, U.S. taxpayers had invested nearly 185 billion into Fannie Mae and Freddie Mac. Right, so the Treasury is going to always save the big conglomerates. Not much that we can do personally, but of course that is helpful to know that stuff here. I don't know why it's loading here, because I definitely have it loaded somewhere else, but all good in the hood. Go ahead and go over and where we can discuss it. All right. So we don't necessarily care to understand what Fannie Mae and Freddie Mac is, because you guys should know this by now, because again, we did discuss that. All right. So we really want to figure out, not necessarily why, because we know why, right? It's like I mentioned, they want to save money for whatever plan that they have. But let's see, how is it that it will change mortgages, right? So essentially, I'm trying to do is give you guys different perspectives, give different ideas as far as why things would change and go into different areas. Because again, this is just all conversations at this point in time. Who knows when this thing will take place? But I personally say, if it does take place, it will impact the average individual. And if you, like I said, if you're in the market now, this is maybe a time where you put your foot on the gas a little bit, right? Just in case. But again, the time is literally inevitable at this point to whoever can figure it out. But if prioritized, these institutions will operate like private companies without the government backing, right? Right now, they currently have government backing. So that helps with keeping rates lower, right? This will lead to stricter lending requirements, which is not even good, meaning they may even require higher income, right? They may even require what's it called? Your credit to be even higher. They may even require your debt to income to be even lower, right? So we're talking about this right here in a market where honestly, all of what I just mentioned is impacting the average consumer on a on a regular basis. So that is essentially what could actually come from it as well. But as I mentioned already, so we have higher, oh geez, we have higher mortgage rates, and they would need to generate higher returns for shareholders. So that this piece right here, shout outs to Bill Ackman for bringing this to everyone's horizons, because this is exactly what he's referring to, right? He wants higher returns for his shares, but also private lending may be more prone to taking excessive risks during boom times, which could we say we're in a boom time now? I mean, give or take, depending on where you're at, right? I think of what market that you're in. And and also something that I didn't see here that was mentioned, which is what's it called? Oh, I'm losing my train of thought right now. It's all good. I'll come back to it. Generate. I really forgot what I was about to say. But without proper oversight, some lenders may offer loan products that borrowers don't fully understand, which sounds like a little bit of 2008 all over again. Also, I did remember what I was just about to say, which is if the government is removed from it, there may be less activity going on with mortgages. There may even be banks that are saying, I'm not going to give out loans as much as I used to, or I don't want to give out loans entirely. So we're now talking about a market where people may actually remove themselves from it. I know Chase Bank right now, like they don't typically like, this is what word on the street is, I would say, right? They don't like the lower amounts. They like the affluent. They like the $1 million plus loans. So, something like that, right? Is what essentially I'm referring to as saying when if a bank or a lender does remove themselves from even giving out loans, that's a big issue in itself. But you have this guy here. I'm not gonna even try to pronounce his last name, but shout out to Dennis, who was a professor at the professor of economics at the City of University of New York and real estate investor. He says that this may be a good thing. It also can give some consumer whiplash, which, I mean, what does exactly that consumer whiplash mean? Because it doesn't sound good to me. But privatization would fundamentally transfer the operational model of these entities by shifting their oversight from a government-backed framework to one governed by the market forces, thereby subjecting them to full weight of competitive pressures and risk assessments. This could lead to mortgage rates that more directly reflect market conditions, may even introduce periods of volatility as new risks. Yes, 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 we know this. So, yes, more risks essentially because obviously you don't have the government backing them no more. Right. And of course, this is if that takes place. Right now, everybody's good. Don't freak out. Don't worry. Nothing to be concerned about. You'll be good. How would rates be affected? So, I think this is a good conversation, right? How would they be affected? I saw a lot of different numbers thrown out on this one. Of course, this is something that no one ever can necessarily determine, right? But Glick says, and who is this guy Glick? Honestly, where did he come from in the conversation? But Glick says mortgage rates could jump from zero point 0.5 to a one whole percentage point, which, geez, if we're talking right now where we're at about sixes, we're at high sixes, hovering seven. So we're talking 7.58% is what essentially is being said. Oh, look at that. I jumped the gun, right? Should have just read a little bit more. So that is essentially where, if this takes place, where it could happen. But of course, I think I like what he says here. Over time, rates could stabilize, but only if private investors step in to replace the security that the government backing provides today. I'll read that one more time for the people in the back that didn't really hear that, right? Over time, rates could stabilize for those only if those private investors step in to replace the security that the government backing provides today. That is right there key. If the private investors, the people that are actually buying these mortgage-backed securities, they don't step in to help out and allow this to be a smooth transition, then that's where I think more problem would occur. And he even says it in the next statement: if this transition is messy, rates can go even higher, and that would seriously impact the home affordability for everyone, as if it doesn't already impact people. So that's something that I think we should all pay attention to a little bit more. In fact, we can actually read this one here, which is let's in aligns with Glick's rate predictions. Also foreseeing a rate jump of 1 percentage point or higher within the first 6 to 12 months of privatization, which I said again, I could see this happening in 18 plus months. So he is essentially saying after 2 to 3 years. However, he expects the markets would adjust and hopefully, obviously, that competition increases, which then that means the lenders, there's more loans, there's more originations being taken place. Another guy here mentions in the first of 6 to 12 months, he can see rates coming from going up from a quarter to 0.5%. So it's all, just day by day, day by day, honestly. And, and sometimes that's all you can do with this. these things. Most of real estate, if you don't know, is going to move really slow. And so real estate moving slow, it allows you to do what you have to do, but you really have to have all your ducks in a row prior to, because if you don't, then uh-oh, spaghetti-o. But I want to show you this here because I know I talked a lot about, you know, just the Fannie and Freddie Mae. Well, Freddie Mae and for the price point of it. So if we I'm just waiting to add this to the screen so you guys can see it. Mm, spaghetti. Okay. So let me do this here real quick. All right, let me share my screen so you can finally see what I really wanted to show you. So this is the stock in itself. So I'm gonna zoom out so you can see. Don't tell me that you can't show me what was going on for the past couple of years. Don't do this. All righty. You want to do this to me right now? Give me 1 second as I load this up for you. Because what essentially I want to be able to share with you is show you how is it that the stock market, the stock in itself doing now, right? In comparison to prior, now, and then, yeah, I feel like I'm lagging. Am I good? Are we good? Okay. So while this loads up, sorry for that. I just need that chart to load up. Gotcha. So here is the stock prior to. This up, I'll be able to share with you exactly what's going on there, and so you could see for yourself how it all is. But now you'll understand a little bit more when I say Bill Ackman, right? Why he's behind that, and I want to call him out, but that's the man that's been really raving and speaking on this a little bit more, is saying, "Hey, we need to get this out of conservatorship so that obviously he can make his chicken the way he wants to make his chicken." Jeez, welcome to technology. That's so weird. I don't know why it just cut off on me, but anyways, I wanted to share with you this perspective of the former FDIC chair, and I thought it was pretty interesting to hear what she had to say in regards to really all of this taking place. So I'm going to go ahead and share my screen and let me know that when you can hear it. There we go. So let's go ahead and take this a listen to, and she brings up some key points here. I'm getting word that this is not. This is something. Maybe I won't be able to play that video for you guys. I don't know. Let's. I want to give it one more try, but this is the last straw for me because I think what she said was like really good, and it gives an entirely a new perspective from somebody that's of course sitting that was sitting at least in that position. So sorry for those that's on replay watching this all over again, but yeah, I'll go ahead and play that back and hopefully that goes smoother. We just gonna have to move on to the next one.
One other matter that may be shifting in Washington is the fate of Fannie Mae. I believe you were on the board of directors there, not currently, but so you have some expertise. What do you think happens there, and what do you think should happen there?
Go watch this on your own time, guys. I don't know what's going on. This there's a good information that I want to be able to share with you all, but that doesn't want to go out. But when you do get, if you do get a chance, go watch, go listen to what she has to say. I mean, I could try to sum it up as much as possible, but I literally watched this a while ago. But let's just put it like this, I'll read a quote that she says, and that is far too long. She was pretty much saying, "Hey, how long it was in conservatorship is too long. It should have been out a long time ago. This is now the time for it to be out of it." And that's actually why she was in. That's why she took that position, right, to be the FDIC chair, to be able to go ahead and take over that because she was, I guess, excited for it. I don't know. She could speak for herself. If you watch the video, you'll hear better what she exactly has to say on that. But man, that trumped the whole idea of playing that video. So it looks like all the other videos I have for you guys won't even work either. But we'll truck through it. We'll figure it out. I hope you guys kind of understand, right, why the importance of the conservatorship and where it's at right now, and it going private is a good thing, or it could be a bad thing depending on exactly where you're at. I think it's going to be a bad thing just for the general market, simply because, again, if people are having trouble already trying to get into the market, this is just another hurdle that everyone is going to have to navigate through to try to make it into home ownership. Or even if you're trying to refinance for whatever reason, if you don't have a rate that is, let's just say below 5, right? Which I know a lot of individuals have a rate below 5. So refinancing may not be an option for individuals unless if they decide to refinance and deal with the high rate at this current time. But I'm not the type of person to go ahead and feed you a whole bunch of doom and gloom. I'm just really here to provide you with the information so that you know how to maneuver, you know how to move forward with it, and you can make better choices and decisions on, what does home ownership really look like for you. Because if you guys don't know, I'm connected to thousands of real estate agents, like literally all across the entire country. So if at any point in time you do feel like, hey, you need help with real estate in your specific market, then I would suggest reaching out to me, and I can actually share with you where exactly to go to find that information, right? Reach out to me, fill out a referral form. I'll be in touch with you to share with you, kind of get a better sense of what it is that you're looking to do, but also at the same time, how is it that we can connect you with the person that is going to best help you. So if I go ahead and share I just want to be able to share exactly where exactly you go. So you'll go to my website, ronniepolynice.com, and right here, if you honestly, you just press let's chat right there. It will give you right over to the referral form. You take care of all this. All right, just fill out this information. It personally is going to come directly to me. It's not going to go out to anyone else. This information is confidential. I keep it real close and knit. You fill all this out, press send. Once you're all said and done, I get that email. Therefore, I'll reach out to you in like 24 to 48 hours, and we'll have that conversation about what it is that you're looking to do. That way, we can find that real estate agent that services your area, because I can't spread my wings everywhere. But that area, that real estate agent that does service that area, to be able to help you maneuver that real estate market in itself. And that's what this real estate is really all about. You want great partners all across. You want great partners everywhere, because that is essentially how the job is going to get done. If you have partners that don't care about it or what you do, then it does get that. But okay, I'm going to share with you, because I was able to get it somewhere else now, my screen once more to show you the stock. We're gonna take a kind of double back on what we were talking about beforehand. So you guys can see this is the, I believe this is the Fannie Mae, right? So this is Fannie Mae's stock. So prior to 2020, prior to 2020, 2008, it was having a joyful show. It was doing its thing. Obviously after 2008, in fact, let's see exactly. It was October of 2007, was it? That I just saw? Whatever. It was October 2007. After that, yeah, it never saw the light of the day again. And so now it's starting to get some steam. And that's, of course, after the whole Bill Ackman really starts to kind of rave on it and bringing this to everyone's attention. Of course, if you don't pay attention to this stuff, you won't know. So here's this is now Freddie Mac. So again, both of those guys are going to regulate the conventional market a little bit more, and that's where most of individuals are purchasing loans through. In fact, if I read correctly, I wish I had it pulled up somewhere. I believe out of all the loans that's taking place, Fannie Mae and Freddie Mac, they control like 70% of the market. So yeah, they do a lot of damage if they will do a lot of damage if all does not go well. But again, you guys can see prior to 2008 what it was really doing. It was doing its thing. And what happened here in 99? Something occurred where they took a nice dump. And then, of course, same thing, right? So, same thing as Freddie Mac or Fannie Mac. Fannie Mae. I said Fannie Mac. Same thing as Fannie Mae, after 2008. So, they're just trying to revive that. And I think Bill Ackman is all behind that for the reason of, the stocks that he owns. So I don't know. What do you guys think? Do you think the government should get rid of it, cut costs as they're trying to do, or is it something that they should hold on to and really just bear with everything else that they got going on? Personally speaking, don't break, don't change nothing that isn't broken. That's just kind of where I sit with it. I mean, if you start changing things now, who knows what's going to come from it? Who knows what kind of damage you're going to do? And that right there in itself is kind of where I'm like, mm, are we really helping the market? Really? That right there is why I don't. Not. I'm like, why change it now? I would understand it not the case. We're good. Interesting. I have this other video that I was going to play for you, but videos don't seem like they're gonna play today. So we're just gonna go ahead and move on and start talking about. If you guys do have any questions, also please drop them in the comments. That way we can go ahead and discuss them. But we're gonna go ahead and move on to talking about the market. And I want to first and foremost say, for those federal employees, because I did see this and I was like, that I don't know why we're seeing headlines on the DMV market already. But for those federal employees that are getting laid off, and everyone's now saying that, all right, well, here comes the DMV market. When I say DMV, I'm talking with DC, Maryland, Virginia. That market, everyone. I don't know how many people heard, I spoke to about it, how many articles I saw, and I was like, why is everyone freaking out? This is literally something that is occurring now. In fact, if you really think about it, if you were to be late on your payment, right, on your mortgage payment, let's just say, like, let's just hypothetically say, someone loses their job, working for the feds, and they can't find another one. So, and let's just say right now we're talking February 19th, so that means they already made their payment this month. We're saying March, you're immediately where the bank is going to say, beat it. These things all take time. Again, real estate low. So all of this, all this, the DMV market is going through shambles, and I'll share the headlines. I mean, we can even go through it as well. In fact, I had conversations with federal employees that were actually that's going through this right now, and they're like, yeah, well, it's either going to hurt some individuals or it's going to help some individuals, but I don't think not everybody is taking the bait, and I say bait intentionally. But let me go ahead and share what I'm seeing, because maybe you didn't see this. Maybe you're not even looking in the DMV market. And so you have zero idea as far as what I'm even talking about. So I'm going to go ahead and share my screen. I don't know why it's taking forever to do it. Did I do something wrong? There we go. Man, I need to have a conversation with Spectrum because whew, what we're experiencing right now, it's just no bueno. But yeah, like I said, right? So DC housing market remains stable, right? No crash in sight. This is one of the articles I found. And I was like, this is probably one of the better ones, right? Before you actually see the ones that everyone is freaking out about. But see here, right? Despite federal layoffs and office returns, there's no sign of a market crash or a surge in home listings. Again, this stuff all is really going to take time. This, maybe you can't even see it, but none of this is going to actually happen tomorrow. So to see these articles, if you're in the market right now, I mean, if you're a buyer in this market, this actually could be really helpful for you because prices could come down in that area specifically, especially if this prolongs longer than anticipated for a lot of individuals. But for the buyers that are in the market now, keep your eyes peeled to the market, see what's going on. Better yet, make sure you're ready to, participate, and when that time does come, hopefully your situation doesn't change either, because if that does happen, then of course you'll be SOL too. But that's one of the articles. Um, we could see again. See, so what they're saying, Fox 5 spoke to real estate experts and reviewed data to see how much truth there is to the viral social media post spreading misinformation about the DC housing market. Turns out not much. I've seen some posts where people are panicking, saying the DC market is crashing, and that is, oh my god, this is hilarious. It's the information everywhere in regards to real estate, man. You gotta really know who to pay attention to, who's gonna feed you that information that's gonna be no BS, straightforward, straight to the point, and actually know that that's helpful information. And unfortunately, there's a lot of people that's just kind of doing things to go literally viral, but to each his own, right? Here, they actually shared. So there were 2,829 new listings that came onto the market in the week two period, in the 2 week period between February 3rd and the 16th compared to last year. So not that many new listings. And we are approaching that season where it is spring. So you can expect a little bit more activity going on anyways. Right. This could honestly, for those federal employees that took the bait, this could be a blessing in disguise for them because maybe they want it out anyway. So they want it out. They can take that equity and go play with it wherever else they wanted to. But again, the narrative can literally turn into, oh, there's too many listings on the market, and the federal employees being laid off is an impact. But again, we're going right into spring season, which is spring season into March, I mean into the summer, which is the busiest time for real estate in general. Let's see. There, however, Nick said the condo market, however, is seeing more deals since they are not as expensive as they were 5, 6 years ago. So the condo market seems to be the place to be. Well, as a seller, maybe not so though. Maybe not so as the buyers. But of course, if rates go down, and this is a conversation you'll hear constantly, right? If rates come down, everyone's gonna flood the market. Literally, everyone's gonna flood it. Could be a good thing, but I don't really see it being a good thing for everybody if rates do come down, especially if you're not ready, right? So if you're not ready and you're waiting for rates to come down, you should be preparing yourself right this second, because that's really going to be the only thing really holding you back. But here's the I guess they were going after clickbait. It's unfortunate. I really don't want to go through this article entirely, but I do want to point out some things because, again, I don't really see it as being a big issue just quite yet. Others say the market is plummeting while home prices are dropping by tens of thousands of dollars. And it depends on what area we're talking about in the DMV in itself too, because again, not everywhere is going to be a seller's market still, which in fact we can go ahead and I can go over to show you that too. Not everywhere is going to be a seller's market right this second. Right. So if we're not in that seller's market, yes, you can expect prices to drop some. It's all retrospect to what's really going on. And look at this picture here. It's just a snapshot. I mean, this is a snapshot that I found on the website, but this literally it's crazy. Right. So this 9 times out of 10 is I'm almost confident that we're in a buyer's market in the DMV area. Right. At least this is talking about DC. So prices coming down 10,000, then that's, especially if it's 10,000 coming down by 10,000 and it's been on the market for 30 plus days, maybe 50, then yeah, that's seems okay to me. Whatever. Anywho, you'll have people that's gonna go ahead and try to freak you out off of anything and everything. Here's how many people, if you're concerned, right? How many people are actually planning to move? So this is for everyone that wants to move, thinking about it, would like to, whatever the case is. Seems like there's more and more people that are going to be getting into the market now than 2020, which I would definitely like to fact check this, because in 2020 everybody was purchasing. So more people are looking to get into the market now. At least how many people are looking to get into the next 12 months? So if you fall in this park, just know that these are your competitors, especially in that market that you're trying to get into. This is essentially what you're gonna have to be dealing and going up against. Is that good? No, because now this could lead to multiple offers, which means maybe multiple bids that you're gonna have to make, going over asking price, having to literally choose a home that you may not be convinced or really want, but you have no choice because you got to buy a home at the end of the day, right? Especially if you're putting yourself against the wall where you have to sell to buy, or your rent lease is coming up, or your rent lease is ending, I should say. Well, let's go ahead and check out mortgage rates for you guys that are really in the market now to see how that's going to look for you in the near future. So let me zoom in for you to be able to see it. Yep, so we're sitting at 7, and honestly, we've been sitting in this area since, what's this, October of 2022. We just been doing the dance up here. And I know you guys aren't gonna like what I'm about to say, but this could be the new normal. Unfortunately, right? The things we have to deal with. This could be the new normal. And this is dating all the way back to the 1980s, where you'll be able to see what rates we're doing. And what we experienced, I think, is first time we've ever experienced that in the past couple of years. So for those that are waiting for interest rates to come back to these 3% levels, you might be waiting for a very, very long time. And in fact, I don't know if I dropped this video already where I said it, but if we have 3% mortgage rates, just know you probably won't be thinking about buying a home at that time. But as you can see, right? So here it's kind of steady, right? And it's steady for quite some time. So this is 2013 going all the way to 2018, right? So we're talking 5 years of literally just in that same range. Same can go here. We're talking 2022, so 2027. Just if we look back in just history, right? If we even go, let's see what happened here, right? How long was this here? 2003, 2008. Oh, look, I think we found a nice little trend here. And this is not factual. This is not something that you should take for verbatim. This is me just looking at a chart and putting things together and seeing, is there something there that we can literally take away from the scenario? But this is what rates look like for the past, I mean, since 1980 that we're talking, right? So do what you want the information. I will say I don't really anticipate rates based off of a lot of what people are saying. Even this guy here, one of the feds, right? One of the people that literally control interest rates, not for mortgage rates, right? Control interest rates, the borrowing of the interest rate. He says inflation is, I guess, quote unquote, back slightly. So does that mean rate cuts are going to happen in the next couple months? Probably not. It's looking like we're gonna stay exactly where we're at until they can figure out another reason to give us some more cuts. And so I just shared with you guys how many people are actually looking. So for those of you that are actually looking in the buyer's market, well, just looking in general, here's some areas that, it doesn't really necessarily feel like a buyer's market. And so while that is loading up, I should have had that already loaded up for you. Sorry for that. All right. So as I mentioned, you have more people getting into the market, more people wanting to buy in the next 12 months or so. I think last week I shared a photo where it kind of showed you what markets were really hot. It looked like literally just northeast at this current moment, I believe, was one of those. Show you with this. You lost me for a sec. Give me 1 second. There ain't nobody in this room right now, so Oh, look at that. Okay, but back to action. So how many months of supplies on the market, right? We're at a 6 year high, sorry, which is good, right? For buyers, not so much sellers. Right? If this number continues to rise, that means you'll have more options and more choices as a buyer. But if you're a seller looking at this number rise, that means you're gonna have to get your home off the market now before you have to continuously do price cuts, or just stay with your house. Right? You pick and choose what you got to do. But it's like, we could look at this all day, all night. It's interesting enough because I will say you can see that this number is as high as it is. But if I go ahead and share with you this headline, it's going to share with you some entirely different story, right? So home prices grew in January. So even though we're seeing increase of supply, buyers are kind of sidelined, but obviously buyers want to participate in the market. We're still seeing growth in the market. And so let's read this here. The 10 of the 50 most popular US metros recorded a drop in home price month over month, led by Tampa. I know Florida's getting beat down. Texas is getting beat down as well. Of course, you probably can't see this, so there you go. Those are two markets that at least I know of are getting beat down. I actually spoke to someone today that was trying to relocate from Tampa, and he was simply saying, "Yeah, the cost of Tampa is not it right now." And as you guys can see, real estate is just gonna continue to go up. Get in the game, y'all. Get in the game. Do what you got to do. Even if it means you got to partner with somebody that you never thought you would partner with to get the job done. When I say partner, I'm not necessarily talking about your romantic partnerships, partner, your romance at all. I'm not referring to that. I'm more or less talking about like, hey, finding a partner that can help you get that loan, or even finding somebody that can literally, maybe you are on the financing side, that person is on the job side. I don't know, but here are some of the hotter areas, right? So we just talked about some of the where's the home growth coming from, and you could take a look at these markets, right? So you should be able to see that, to take a look to see where is growth really coming from. Oh, I see we don't have any questions. If you guys do have any questions, let me know. Drop it in there so that we can get those things covered for you. Because those are the markets that I think a lot of individuals are moving to. I don't know if it changed so much from last week. At least these numbers, we can always go check, because again, everything has already been recorded and documented. But if you're not interested in any of these markets, in fact, you don't want to be part of the fastest growing sales price in any of these markets here, then you might actually like what I have to share with you next, because these are the best markets for first-time homebuyers. And of course, if we're talking best markets, we're really looking at the price point. And so this is not something that I pulled up. This is obviously, I shouldn't say obviously because you may not know, but this is something that was curated by Realtor.com. I'll zoom in so you guys can see that, where you'll be able to see what markets to participate in. All right. So if you know what markets to participate in, and you can have fun there, right? And of course, if it falls within your price point, then there's some things that you can get away there. But I'll go ahead and bring this back because I know I talked about this last week. Right, so these are the areas that are the hottest, right? So, oh, look, California is still interesting. Again, this is something that we shared last week. So if you weren't there, then now you could see it here. But last week, we went over this chart. I want to compare it to a chart that, so this is this is as of 2024. That's why I wanted to bring it back, because the one I'm going to share with you now And this is good to know what markets are a buyer's market, what markets are seller's market. This is why I'm sharing this information. So okay, if you're going into any one of these markets here, you should know exactly how to participate in it, right? If you are planning to go over asking price, and you're in a buyer's market, you might want to really think about what you're doing. Or even if someone is trying to get you to go over asking price. Now, if it's a home you love and you can't see yourself doing anything and there's multiple offers, even in this buyer's market, then you got to do what you got to do. But let me share with you this one. So, as you guys can see, thanks to Resi Club, specifically Lance Lambert, for putting this together. Because I mean, I'm a visual learner, so I hope you guys can actually take this away. But really pay attention to this, and I really want you to look here first. All right, I really want you to look at these two because I know Tampa is one of those markets that were leading in the downturn, right? But these are the shift in the metro level home prices since the market's respective peak in 2022. And let's go ahead and take a look. Right, so it's kind of just sharing with you. Let me go ahead and do that right there for you. As you guys can see, Northeast, as I mentioned, you can even look at the previous, right? If you go rewind, I don't know if I put DVR on this actually, where you can actually go rewind and see exactly what markets were really hot at the current moment. You can see why, right? So up north is always gonna, right now at this current moment, they're getting price increases. But if you look at what's red, and this is in 2022, right? Remember that this isn't currently, right? So this is as of 2022 in respect to their peaks. You can see that because if I share with you this is as of 2024. You can see how these two kind of flipped, right? You can see how this was 24% on the last one. You can see how now it's 10. Let me bring that one back. Yeah. So you can see how it all in retrospect to, right? So how much metro level home prices shifted in the calendar year? So the previous one was just from 2022 peaks, and this is just based off of last year. And you can see the Texas and the Florida market are still getting beat down. I hope this is a chart that helps a lot of you navigate the market that you're participating in or you want to participate in. And if you're still unsure about what is really going on in your market that you're trying to buy in, that means you're probably not connected to a real estate agent. And this is when I'm going to advise you that go into the description. You'll see a referral link that you can go ahead and leave your question. Go actually to the link, click the link, fill out the form entirely. That way you can now understand, at least leave me to understand what it is that you need help with, where it is that you need help with, whatever market that you're in, to be able to purchase in. Because again, you'll see that not everybody's going to know exactly how to maneuver through every single market just based off of what the headlines are showing. So you really got to take a deep dive into this information from time to time to be able to understand what's going on so that you can make the wise decision and not overbid. I mean, if you can save a couple of dollars, why not? In fact, actually, I just remembered about this conversation that I had this morning with a family member of mine. He's just literally asking me what's going on in the Connecticut market, and I told him, I said, well, it's red hot there, so I don't know if you really want to buy at this current moment, unless if you're willing to overbid and kind of get in a competitive bidding war. Also, we just put something on the contract. I helped one of my buddies get a home on a contract over in Connecticut. So it's a fast moving market that you're going to go ahead and see over there. And sure, we have builders that are going to go ahead and help out, but with the inventory at least. But that may not be the case for us that much longer. And then just before I wrap this up, I'm going to share with you a nice other pretty photo, because one thing that I know in our market here in North Carolina, we have a lot of builders where to go. And so I saw this and I was like, uh-oh, hot dog. So their gross margins for this is Lennar specifically, and this is based off of their quarter report. I'll zoom in just here shortly. Just want to be able to read the headline on it. But their home sales for the first quarter, and you can see they're forecasting prices to, well, not even prices, but they're forecasting their gross margins to come down. And the reason why I'm sharing this is because right now a lot of builders have great incentives. And so if their gross margins are going to come down, those incentives are going to be next in line to come down. And when I say incentives, I mean they're offering maybe rate buy down. So meaning if your rate is right now, we saw rates where they were at like 7, right? So if they're willing to, if they're able to offer you rate that buy downs, you could probably get it down to a 5, maybe a 6. Who knows? Or if you decide not to buy down the rate, you can even use that for closing costs, right? And so that's Lenars. And so if we go ahead and pull up Toll Brothers, same scenario. So builders are going to start feeling the pain, their gross margin. So they're going to start feeling the pain, which means it's just going to come down to the consumer. And so, with that being said, if you all understand, or at least maybe you don't understand exactly what's going on in the real estate market, I truly indeed invite you to tune in here next Wednesday, 7 p.m. This is where we're going to talk about everything that's going on in the real estate market to help you as a first-time home buyer or just a home buyer in general to know what's going on. So to understand how is it that you can prepare yourself, how is it that you should be navigating the market so that you can finally become a homeowner. And don't forget, I am connected to thousands of real estate agents. So if you need to be connected to a real estate agent that I'm connected to and that can help you purchase that home, go to my website and fill out the form entirely. I'll show you once more, as long as this thing doesn't give me any issues. I'll show you exactly once more how to really get to it. So I'll share my screen once more for you. And I highly advise you all to do it, right? So just ronniepolynice.com. You should see it in the description below. In fact, if you click the description below, it's actually just going to take you straight to this form here. Fill it out entirely. That way I know what it is that you're looking to do, whether you're a buyer, you're a seller, or whatever the case is, even your timeline. That all that stuff helps me understand who is it that I should partner you up with. Because obviously partnering you up with someone that's too busy is not going to be helpful, right? But enough of me. Hope this information here today was helpful. If not, please leave me feedback, comments, reviews, anything that you think that that would help you in that home buying journey, because this is truly indeed all about you and making sure that you can accomplish your goals. But that being said, peace.